Hi, friends. So we meet again for this Multibagger series. This is series 9, which means this is the ninth episode wherein we'll record the stock for the Multibagger. So the company which I've chosen this time is Tips Music Limited. I think a very well-known company. We all have grown up listening to music on Tips. Originally, they started with cassettes. So no, we have. I mean, at least I have grown up listening to cassette music. Then again, the music started coming in CDs. Then a lot of pen drives, iPods, and iTunes, etc. They got some momentum, and then nowadays we have digital platforms like YouTube, Amazon Music, Spotify, etc., etc. So there has been a transformation of the way we have used the platform to listen to music, but the basic framework of music has not changed. So whether it is classical, whether it is jazz, high beats, or let's say take folk musics. Uh, all those kind of musics have still remain into our hearts. Many people have different choices. Those choices still remain. There is a plethora of different kind of musics available, whether it is English, Hollywood, Bollywood. Then again, as I told you, local music, which has been very inspirational, and it actually resembles our rich cultural veracity and the kind of grooming that we have out of the music. Music has always been some kind of hobby for many of the persons. It is actually considered to be one of the best stress relievers. People listen to it when they are happy. People listen to it when they are sad, and there are different kind of songs for different kind of moods. Those all things put together actually makes this industry very attractive, very lucrative on a stock market point of view. I'm not saying it's something which is to be monetized. It yes, but yes, some kind of monetization is essential for these companies to get leverage and to get keep on producing some good songs for us to listen and keep on adding to the variety of the already treasure that we have in terms of music. So the Tips Music Limited is one of the company which I've chosen. I think in the industry we get some more companies like Saregama, but I thought when I just researched on the numbers, I found Tips Music to be the better out of the two, and that's why I've chosen Tips Music. But if you feel that you need to diversify your portfolio and you want to have at least two companies in the industry, then you can divide 50% of your overall investment value in these two companies so that it gives you some kind of stability, some kind of confidence, and some kind of contingency which actually stock markets do require. Now, the key facts of this company is that this is the only listed player to expense of 100% of content cost in the quarter of release. Catalog comprises of music in over 25 languages available across multiple platforms globally. They have established A&R capability. They have 101 employees, 70% revenue comes from digital platforms, 25 plus partners across media businesses, 117 million subscribers on YouTube. Uh, it's a debt-free company with around, we already seen in with around 271 crores of cash and investments. Founded in the year 1988, so a very low, very old company, and they've seen the business cycle. See, I always like the company which has gone through business cycles, which have sustained those kind of competitions, which have sustained those kind of changing behaviors. And once you start innovating and start adapting to changes that happen around you, that makes your company much more favorable for a long-term investment point of view. We have seen a lot of companies which perish once the competition changes, once the form of acceptance in the industry changes. But these companies who have traveled to a distance, they've manured their way through these tough times. Those are the companies which we should look forward for a long-term investment, because we assume that if they have traveled a distance for the last 30 years, we assume that they will travel the same distance, the same same enthusiasm and same competitive mindset for the next 30 years as well. And that is where I say in India, the company survives till you're living, it will make a fortune out of you. See, ultimately, many of the companies will die, but the companies will survive. And the company like this, which can never die down, and in terms of the industry pie can never die down. Music can never perish. Yes, your company can perish, but music can never perish. This is something which is very close to our heart. Our grandfathers have listened to music, our fathers have listened to music, we are listening to music, our children's listening to music. It is something which will keep on passing on from generation to generation. It is not that we expect something to perish off. It's just traveling. The forms may change, the choices may change, the platforms may change. Those are all part and parcel of the game. But ultimately, the industry will survive. It's just that how much market share you're able to grab, how much you're able to retain, how much you have to increase, and how you can increase your margins and revenue profits. So that is more important. So, what makes this company very unique? So, they have been optimizing on the capital allocation. That's one good part of it. The Indian music investment opportunity is very huge, so that makes us much more reliable. And I told you it's a very old company which has traveled a distance, which is from different forms, sustainably increasing market share. That's again fantastic thing. The subscription wave is there now. We'll discuss about this in detail in the forthcoming slides. We all know what subscription means, but nowadays people are even in India the mindset is changing, and we are able to spend money. It's not that we want everything out of free. See, YouTube and other platforms, they all started out of free, but now we all realize that subscription gives us much more features. They give it much more better user experience. They give us much more the platform size is much bigger. The anything which you, so for example, if you're listening to songs on free, if there are 1,000 songs available, if you go for subscription, you will find 30,000, 40,000, 50,000 songs. So the depth of the service increases once you go for subscription, and the subscriptions are not large enough that you that can bring a pinch onto your pocket. These are low subscription values, but they give a lot of value add to your overall daily life. So that is why I think the subscription wave is there, and it's just going to stay. I don't think it is going away very far too soon. Uh, their content powers on global platforms is very good and is ever increasing, growing listenership and increasing content addition. That's again a very key feature, a unique feature for this company. Now, if you see the optimizing capital allocation, the total payout to shareholders in FY25 has been 136 crores. What do you mean by that? They've done a lot of buybacks and they give a lot of dividends, and that amounts to around 136 crore, which is again very huge and a good amount of money which is given back to the shareholders. If you see in the left hand side of the chart that the equity shares have been decreasing every year, which means that they're doing a lot of buybacks, which is why the open market shares have been decreasing. And once that happens and the company is good, then the share prices automatically go ahead because the number of shares in the open market is decreasing. And if there are a lot of takers, because if your company is performing good, then probably your share price are automatically going to increase because you are able to give higher P multiple to these kind of companies. So if you see in 2009, they were around 17.31 crores of shares. Now it is around 12.78. So it's minus 26% of shares. Uh, the right hand side of the chart is giving you what is the net cash. We already seen 271 crores is net cash is available. How the content costs have changed over the years. The interest cost is pretty low. How the dividends have been given. The buybacks are also there. So in 2024-25, 47 crores of buyback has been done. It's pretty huge. So this chart is giving you those kind of numbers, and I think they're pretty impressive. Now, sustainable market share is something which is, or increasing market share is something if you want from any of a multi-bagger company. So if the pie is big, and within that pie also, if your market share is increasing, that becomes a good business. That is something which gives you an edge over the other companies, and these are the stock which can become ultimately multi-baggers. So if you see in calendar year 2022, it was around 3441 crores, but now it is around 5834 crores. So it has changed on a CAGR of around 13.7%. Revenue also has been increasing from 91 crores of FY21 to around 311 crores by FY25, which again becomes a very increasing market share for this company. So that's a good growth, and that gives confidence in such kind of companies as a stock investment. So they have a lot of global platforms and content power. So all these are well-known platforms. We all know that. I don't have to go in deep. So any name which you can think of is all partnered with tips. You know, YouTube, Ghana, ShareChat, Spotify, iTunes, Netflix, and they have their synchronization deals as well. They have Sony as their broadcast partner. Then you have Viacom, Zoom. In terms of sync deals, you have Motorola, Coca-Cola, Excel, Viacom, Tenor Productions, Madoc Films. Pretty impressive. At least this content is it's pretty impressive in that way. So any name which you can think of, it's all there. Upcoming music releases, we'll just skip this part because they keep on changing from month to month. So how big is, or let's say how exactly is the Indian music investment opportunity? So this company has been getting the Indian market share of around 15%, and in 2023 the volume-wise market share has been from outside India, which is around 85%. So you have a lot of market share to gain within India as well. And especially if you see the global music label revenues, if you see India has only contributed 2%, 98% has come from outside India. And so this is one area where you can see now, at least because the charm and the willingness to now pay subscription based music things is now increasing in India. People want to have more better and rich experience, and they want to pay something out of it. So with that culture increasing, especially in the metro cities, and then probably the other towns can also catch up. So these things will become very attractive going forwards, and that is how that India is the fastest growing market by volume and provides significant opportunity for monetization of demand. So if you see the number of streams has increased 34% between FY22 and FY23. Now it is becoming 7.1 trillion streams. This is in FY23. So a very growing industry, and it gives you a plethora of opportunities going ahead. So, as I told you, subscription-based revenue is increasing, and now it is 3x the revenue of ad-supporting streams. So, in 2024, streaming comprised 69% of total revenues, and 51% of all streams were subscription-based. The similar is around 2024 also, it's around 51.2%. So, other streams are, synchronization, performance rights, physical also is there nowadays, but it's reducing a lot. Download and other digital platforms. So all these resources are contributing to the revenue and profits. Uh, the chart is in front of you. You can go in detail once you have time accordingly. So streaming grew by 1.4 billion US dollars to reach 24 billion US dollars, representing 69% of total recorded music revenue. Subscription streaming rose 9.5%, while ad supporting revenue grew by around 1.2%. In terms of synchronization, so synchronization revenues rose for the fourth successive year, reaching 650 million US dollars in 2024. Revenues from synchronization accounted for 2.2% of the global recorded music market. Performance rights revenues also grew by 5.9% in 2024, reaching 2.9 billion US dollars and accounting for 9.7% of global recorded music revenue. That's how the subscription revenue and streaming revenue stands in point of view. So India recorded the highest digital engagement globally, with users spending more than 1.1 trillion hours on digital platforms. So that's the kind of pie you have as a business potential. So now I told you that subscription based things are getting more acceptable. So I just give you an example for Spotify. Suppose Spotify India subscription revenue up by around 90%, and ad revenues rose by 114% for FY24. So, according to Spotify India's 2024 advertising tech, the platform now boasts 70 million monthly active users who spend an average of 1.44 hours daily streaming music. That's, I think, great number. 59% of Spotify's total reach comes from the top 8 metro cities, while the remaining 41% is spread across 7,000 towns. 63% of Spotify India's users fall within the 25 to 44 plus age group, while the 16 to 24 age group makes the remaining 37%. Subscription realization per stream is higher, which will help drive top line growth and improve margins over time. So this is the Spotify data. I think this is where Tips has to go in. They have to target those subscription-based revenues into their portfolio. This is where the competition lies. This is where they need to beat the competitors. And if these markets keep on increasing, see the opportunity is very huge. So you need to capture the market, and then you need to increase your market share. Both things can happen at the same time. That will actually become multifold revenues and profits. Uh, Growing listenership and increasing content addition. We have discussed about this also. So they've been adding songs a lot. So in FY22, 276 songs were added. Then in FY23, 896, FY24, 733. Now 443 has already been added by FY25. Ever rich and rich content, about 30,000, 32,000 songs across genres, languages, and decades, giving us high visibility of music revenue. The annual YouTube views, if you see, is in FY25 has become 228 billion views, which is a staggering CAGR of 56% if you compare from FY21 onwards, where only you had 38.5 billion views. If you talk about quarterly views, it's around 19% increase from FY24 to Q4 FY25. The slower growth of total views is primarily on account of YouTube Shorts, which is not a significant contributor to revenue and profit yet. I think many people are still fond of shorts and all, but I think the music lovers they want to. I mean, I'm sure, man, we all know how the music happens. We can't listen music in shorts. I think this number will keep on reducing. Ultimately, you want the song to be run in totality, but no music lover can listen music in shorts. I'm pretty sure. The financial performance, although we are I'll be discussing this on the screener part in detail, but we'll just see some highlights of this financial. So, if you see the revenue is for last 10 quarters around 55 crores, and the content cost has been on 64 crores, profit after tax is 332. So, from December 22 to March 25, you can see a staggering increase of revenue from 51 crores to 78.5, and also the PAT has been increasing and the content cost is remaining variable, but it is decreasing a lot. But still, you will see a lot of good, healthy rise in the PAT. This actually gives you the entire picture. FY21, the revenue was 91 crores. Now it is around 310.7 crores. The PAT has increased from 43.5 to 166 crores, which is a jump of around four times. And the CAGR has been around 31%. The content cost is varying as such, but the advantage is that the percentage profit, the margins have been increasing. They are pretty stable, and those kind of very high margins, we'll be discussing those in the forthcoming slides on screen now. But the margins have been around 65, 66%, huge margins. Because the problem is the only you need two type of cost. One is your content cost, second is your advertising cost. Rest all things are your profit and revenue. And the content cost and your content cost basically becomes just a one-time cost, and the revenues can keep on increasing multiple fold because one song you can hear for 30 years, 50 years, 60 years. It's not that it goes away from the library. It remains there and keeps on adding value out of it. Because if today also I want to hear the Kishore Kumar songs or Altaf Lala songs or any music lover for that sort, those are still there. We all still love Rafi songs or Mukesh Kumar songs or all those things. So these things becomes your treasure, and that's the advantage to the music industry that the content cost becomes one time. But you will have to listen those songs generations over generations that keep on adding revenue and profits into your system. That's the biggest advantage. So if you see the business performance, and let's just see on a year-on-year basis, quarter can be misleading sometimes. For FY24 to FY25, the revenue is increased by 30%. The EBITDA is increased by 30%, and the operating margin increased by 94 basis points. So you can see the FY25 operating EBITDA margin is around 66.5%, which is very big, very good. The EBITDA also has increased from 158 crores to 206 crores. Revenue has increased by 29% from 241 crores to 310 crores. So staggering performance. I mean, I'll show you in the financials screens later on. Year on year basis, especially after COVID, this industry has gained a lot. This company has gained a lot, and it has become a multi-bagger. And probably from here also, it will keep on becoming a multi-bagger going forward because the acceptance of music in a digital platform is increasing. We are leaving away those kind of physical forms of music and getting into digital forms. And digital forms, we all know it's multipliable, it is affordable, and it is easy to adapt kind of a thing, which nowadays the youngsters are, which they are fond of. So, industry leading financial performance. So, revenue we already discussed. I'll not go deep into it. EBIT and EBIT margin also we discussed in the previous slide, so I'll not repeat it. But you see the ROE part. 63% in FY22 to 86% in FY25. See, 63% ROE itself is good, but they are able to increase it further to 86% in FY25. That is staggering number. The EPS has been increasing by 38% CAGR. That's why I told you that even 49.9 multiple is good enough because you can give those kind of P multiples to a growth company, and this is one such company which is growing very fast. So in FY22, you have 5 as the EPS, now it is 13. So a staggering EPS growth around 38%, which is again very good, I would say. Profit and loss statement, we'll go in details in the screener parts. I'm just skipping this slide. Even balance sheet part, I'm just skipping. It's all the cash flow also I'm skipping. These are all there. Now, if you see the how the digital industry is going to shape up, so the Indian digital advertising industry, which is a key driver for Indian music industry, where you get a lot of revenues out of it. So in CY 2019, calendar year 2019, it was 13,600 crores, but now it has increased to 70,000 crores or so. By at least CY 20, it is 2026, it is expected to reach around 70,000 crores, and 25, 60,000 crores. CAGR has been around 26%. Now, India's digital advertising industry reached rupees 49,251 crores in 2024 from 41,000 crores in 2023 and projected to grow at CAGR of 19%. By then, digital media is expected to account. So, digital advertising, which is the key driver of the Indian music industry, this is where actually the volume comes in. This is where actually profit and revenues come from, the public area. So, this is increased by a staggering CAGR of 26%. In calendar year 2029, this contributed around 14,000 crores. In CY 24, it has contributed 50,000 crores, CY 25, 60,000 crores, and is expected to cross or to touch 70,000 crores by FY 20, calendar year 2026. Now, India's digital advertising industry reached rupees 40,000 crores in 2024, up from 40,000 crores in 2023, and it's projected to grow at a CAGR of 19%. By then, digital media is expected to account for 61% of total ad spend in India. The digital advertising industry is rapidly evolving, driven by digital transformation, shifting consumer behavior, and personalization are reshaping brand audience connections. The highest proportion of spends on digital media is claimed by social media, which is 29% and rupees 14,480 crores, closely followed by online video, which is 28% and around 13,756 crores. Paid search contributes 23%, while display banners claim 16%. Online video is the fastest growing digital media channel and projected to grow at a CAGR of 23% through 2026, while social media is expected to grow at a CAGR of 20% over the same period. These are some staggering numbers. On average, India spends 3 to 4 hours on social media daily, which is at par with the global average. 73% of the audience belonging to the age group of 45 years to 54 years use YouTube as the watch online content. Now, in terms of advertising spend, so we all know digital is 49%, which is gaining momentum over the years. Next is television, which is around 28%, and the print media, which is around 17%. The rest are all very small. And the advertising spends across various media percentage, 61% is digital, is forecasted by 2026. This is for calendar year 2026. The current pie of digital ad spends constitute 49% of advertising spends in 2024. And moving forward in 2025 and 2026, the percentage is expected to increase to 55% and 61% respectively, which is very high and very good. That's again a very good thing. So you can see some industry reports. These are all the reports which want to gain some more insight out of it. So this is very good. So this has been the basic presentation of the company. For the financials, we'll go to the screener and study those things. So I'll just give a moment. I'll just shift to the screener. Start. So this is Tips Music Limited. We'll go into the financials of this company. So the market cap of this company is around 8312 crores. So it's a pretty small cap, we can say, of the company. The current price is around 650 rupees, and the high and low has been 950 and 346, which means that there's been a pretty corrected stock. So if anybody wants to enter, this is a good price because it's already corrected from 950 to 650. The stock P is 49.9, which is pretty high. But the advantage is that the ROC has been 112%, the ROE has been 85.6%, and more importantly, the return over 5 years has been approximately 134%. And the sales growth also has been around 31.2%. So the growth has been pretty good. The company is growing by 32% in terms of top line every year. And for that, even if you have to give a PE of 49.9, it doesn't matter at all. Uh, if you get this stock on corrections, it is better to accumulate at that point of time. Now, ROC, as I told you, is around 112%, which is very good. ROC is 85.6. Those are all fantastic figures. The reserves is also 197 crores, and the debt is only 3.5 crores. So it's probably debt-free company with a very high reserve of 197 crores. So a pretty decent company in that way, which is one factor which you always look around. The return has been around 60%, which is also good. It's around 60% for the last 3 years. So I think all these things are looking extremely good for the company. Now, if you have to look about the key points of the company, that also we'll just go through in detail. So the Tips Industry Limited, incorporated in 1996, is engaged in the business of production, distribution of motion pictures, and acquisition and exploitation of music on the rights. The company is also a leading producer of Punjabi films in the country. The company has a large music library with a collection of over 30,000 songs across various genres and regional languages. The company has produced and released around 40 Hindi films in the past 20 years, and also sells the theatrical, satellite, and other various rights to distributors, broadcasters, etc. I think that's again a good thing. That's a large pool of songs. That is again great. The revenue split is as follows. The company earns 100% of its revenue from license fees. 75% of the revenue is from digital platforms, wherein 40 to 50% is through YouTube, and remaining 20 or 30% comes from other digital platforms. We already seen the presentation of those digital platforms, that is in detail. The remaining 25% is generated through TV and public performances. The geographical split, if you see in terms of revenues, are 27% for in FY23 versus 20% in FY22, which means that domestic revenues are also on the rise. International has been 73% in FY22, which is as against 80% in FY22. So it distributes products in South Africa, Israel, and Malaysia. That's again a good, varied presence in the global markets. Manufacturing facilities: the company owns two factories that use internationally recognized state-of-the-art machines, specially imported from Italy and Denmark, such as Oteri, Lyric, and Tapematics. These factories incorporate digital bin mastering facilities, work on just-in-time inventory management systems, and use in-house logistic facilities to deliver more than 1.5 lakh cassettes per day to the Indian market. That's, I think, a huge number. The company has also offices located in the United States, Dubai, in England, where it operates via its licenses. It has over 1,000 distributors and wholesalers across the length and breadth of the country, who in turn serve more than 4 lakh retailers. So again, I think a massive market in the music industry. Social media presence: the company has presence across platforms like YouTube, Instagram, Facebook, Emoji, Spotify, iTunes, JioSaavn, Prime Music, ShareChat, and few more. I think it covers probably the some of the well-known digital platforms wherein you can offload your music and just increase your revenue in terms of digital platforms. As of March 2023, on YouTube, Tips Music has 82 million plus. It's around uh, 8.2 crore subscriber with a view of around 112 billion views. That's a fantastic number. The company spent around 6% total revenues in FY22 on the advertising, as against 5% on FY21. I think the advertising expenses will keep on rising. That is where to invest a lot to gain much more viewership, to gain much more subscriptions. They have a deal with YouTube in FY22. The company signed a music license deal with YouTube. As a part of this deal, Tips will license its large catalog to the YouTube platform, allowing the huge Indian diaspora across the world to create content inspired by its ever popular and super hit music library in diverse Indian languages like Hindi, Punjabi, Bhojpuri, Haryanvi, Marathi, Gujarati, and amongst many others. FY23 updates: the company top 5 albums collectively recorded around 1 billion plus streams. That's again fantastic. In FY23, 896 new songs were released, and the music revenue for FY23 increased by 37.76% to rupees 187 crores. They have a lot of deals and partnerships. So the company has various deals with Madoc Films, Dharma Production, Viacom 18, Netflix, Tata Sky, Excel Entertainment, and others. It has broadcast partners, namely Z Star, Sony, and Viacom 18. In FY22, the company co-signed two deals with Hotstar. One is for the digital premiere, another is satellite premiere, followed by a regional deal with Spotify and a deal with Riso. I think you can just see the names and you can just say, I think it's a wow kind of a company in that way. Uh, it's a debt-free company, which you already seen that the reserves are around 197 crores and debt is only 3 crores. That's again good. The company does a lot of share splits and do a lot of buyback, which gives a chance for the shareholders to earn further, further returns out of it. The challenges, yes, of course, copyright infringement, piracy, and all those things remain a challenge. But I think the company is well experienced of more than 60, 30, 40, 35, 30 years to deal with all these kind of nuisances. So that's about the key points of the company. And if we just go to the chart, as I told you, it has come down from 950 to 650, which is again a good level to accumulate. And of course, if you get corrections, then of course accumulate more on these. If you see, it was a penny stock way back in Jan 2006, but now it has become multi-bagger stock. But yes, it has tested the patience of the investor for 15 long years, and in Jan 2021, it has exploded a lot. I think this is a time where the COVID thing entered, and probably a lot of people shifted towards digital platforms. A lot of YouTube platforms got popular. This is where the music industry also gained more and more popularism among the physical presence, beyond physical presence. I think that's actually turned the company around, and that's how you saw a lot of interest in this company. In terms of pros, so the company has reduced debt. We already seen that the company has delivered good profit growth of 71.5% CAGR over the last 5 years. That's again fantastic. The company has a good return on equity of track record of 3 years of ROE 78.1% CAGR. The company has been maintaining a healthy dividend payout, so we already seen that dividend payout is pretty healthy. But the stock is slightly costly, it's trading around 49.9 or 50 times P multiple. But I would still say for a growth company, you need to pay this kind of P multiples. But of course, if you get things on a correction, it is much wiser to accumulate on those corrections. That's a pretty good way of accumulating it. Now, as I told you that Saregama also looks good to me in terms of one of the competitors, or let's say one of the same industry company. But I actually, when I went through the numbers, I found Tips Music to be better numbers, and that is why I've chosen Tips Music. But you can very well choose Saregama India also. It's again a good company with good financials, or you can split your investment into two companies so that you are bifurcated, and probably the chances of just investing in one company and then probably some kind of a disaster management you can do out of it. So it's a diversified portfolio. You can have two companies also, and you can choose Saregama out of it. Other companies I didn't like, so I will not recommend to accumulate in these companies. The operating profit has been rising, and these are the quarterly result. But we just go and check uh, the operating margin has been pretty healthy as well. We'll see the yearly wise performance. That is actually gives you a better uh, outlook. So if you see from March 2014, the operating profit was actually in loss. It was actually negative minus 5 crores, but it has picked up a lot. And if you see from March 20, which is COVID onwards, the profits have been exploding a lot. So it's around 207 crores now by March 2025. That's where I tell you that this company has become a great investment portfolio stock. The net profit also from 116 crores and now grown to 167 crores. It's pretty healthy rising profit levels. That's been the benchmark and the hallmark of this company. So the compounded sales growth is 10% for 10 years. If you see, it's 12%. For 5 years, 28%. 3 years, 32%. And trailing 12-month basis is around 29%. So again, fantastic numbers. Profit growth in the last 10 years have been 51%. Again, very good. 5 years, 71%. 3 years, 37%. Trailing 12-month basis is 33%. The stock price CAGR for 10 years has been 69%, 5 years 134%, 3 years 59%, 1 year 56%. Return on equity, which is again a very important parameter. So for 10 years it has been 49%, 5 years 72%, 3 years 78%, and last year 86%. Balance sheet is pretty good. As I told you, 197 crores is reserved. Borrowings has been only 3 crores, so pretty healthy balance sheet. There's nothing to complain on these numbers at all. Cash flows are very less. They are marginally cash flows, so they remain most time negative only. So that's again good that do not need to invest too much money out of it. ROC we already discussed from March 22 to 125 it has been around 112%, and you will see the rising trend of ROC from especially after the COVID of March 2020, how the company has grown a lot. Shareholding pattern, as I told you, one of the negatives of this company is that the shareholding pattern has been decreased for the promoters by around 10%. So if you see in 2023 it was around 75%, now it is 64.15%. But the advantage is that the promoters have actually whatever they have sold, is actually taken by FIIs, which is again a very good, I would say, scenario where the promoters are selling and the FIs are buying. So if you see now, 8.23% of the shares, are being held by FIs, and we all know that FIs is investing in this kind of cash companies. These are not derivatives companies. It's a cash company. They always see a lot of fundamentals. They see a lot of financials. They do their own research out of it, and if they are also confident and holding a very good chunk of 8%, I think it's a great number, and around 3.5% is being owned by DI. So DI and FIs put together own around 12% of the company's stake, which is again a good, because these are very researched organizations which only invest the investors' money when they're very confident, especially in the cash companies, especially in the small cap companies. So this gives you a lot of confidence that your investment cannot go wrong. But the bigger players are entering into the market, and they're increasing their stake year on year, which gives us much more confidence that this is one company where we can also invest and have a portfolio stock. So this is about the company. I would have liked. I would have. I think you would have liked the video. This is the Multibagger 9. I think the company is good. The ROE, ROC has been pretty good. It's a company which is debt free. The reserves are very good. The FIS holding, DIS holdings have been good. Promoters around 65%, which is also good. And this is the future, and music is something which will never go out of our hearts. It's a habit for us. It's a culture in us. And the way the digital platforms are exploding, the way the technologies are changing from 3G to 5G to 6G, 7G, the way the data explosion is happening, the data consumption is happening, and the way we are living those stressful lives, we all need music as a stress-free buster to us. We and the culture of subscription-based uh, you know, uh, gaining momentum over the digital platforms is much more increasing in India. That is where I gain a lot of confidence that this company can have their revenues and profits sustained for many years to come. And the another beautiful part of this company is that they always want to give something to shareholders. So they do a lot of buybacks, they do a lot of share splits and all those things, which again gives a boost to the shareholders' value. And that is why I think it's a perfect stock to keep in your portfolio for becoming multi-bagger. So with this, I end my video for today. I really hope that you will like the video. Thank you so much for watching. Thanks so much.